excited. I'm excited. Are you excited? I'm excited. All right, so this is Tuesday. This is February 26, 2019. And on Tuesdays, I like to talk about the technical aspects of tax planning. So this is actually the first time that I've gone live in Facebook on my personal profile, my personal timeline. So this is going to be free for the entire internet for you to enjoy. And really what we're going to be talking about is the technical aspects of tax planning. Now, instead of going really deep into specific tax planning details and getting into the minutia and the detail, which we don't really want to share that with clients. We just really want clients to trust us as the trusted experts. So what I'm going to do is talk about the core 4 tax planning opportunities. And anyone who jumps on live here, feel free to comment in. Let me know what's on your mind. If you got any questions about this, let me know. And we're just gonna have some fun with this, right? So let's get started because I don't like to waste any time. So first of all, the core 4 tax planning opportunities. Who is this for? Well, if you're a tax professional, you need to start talking to your clients about this like right now or years ago, really. But you want to focus on right now because this is tax season. This is when your clients are thinking about taxes. This is when your clients want to talk to you about taxes. And one of the big questions they're going to have is, this crazy 2018 Tax Cuts and Jobs Act, how is this going to change? How is this going to affect my taxes? What is this QBI deduction? What is this brand new, 20% deduction? Where are these tax savings that I hear about? And what you can do is instead of just focusing on the legislative changes with the Tax Cuts and Jobs Act, you can even take that a step further and say, hey, we're actually going to be changing our tax practice to focus on tax strategy. And some of the ways we're going to help you with tax strategy and tax savings is these things we're going to be talking about right now. So now that you're kind of in the ready to talk to your clients about it, let's discuss exactly how we're going to talk to our clients about it. Now, this is for a Schedule C tax client that maybe they do 50,000, 100,000, up to $1 million. I had a client in my office last year. They had over $1 million on a Schedule C. I was like, what are you doing? You have $1 million of income on a Schedule C. Now, this is not to say you have to work with millionaires because this works for pretty much anybody, right? As long as they got about $50,000 of profit through their Schedule C, these strategies are going to work for them and work to help them save money on their taxes, which is what all clients really want from us in the long run, right? As tax professionals, is to help them save money on taxes. So let's get right into it. So the first thing I want to talk about when we talk about the core 4 is the S corporation. Now, if you're like, oh, Jake, I know all about the S corporation. Yeah, I know. But we're gonna drill it down to a quick 3 to 5 minute conversation that we can have with our clients, because that's really what we want to have. Is we want to have this quick conversation about 3 to 5 minutes with our clients. So we can say, hey, this is what's happening with, this is how things are changing with your business, and this how some things can change with the S corporation, how this is going to benefit you and help you save money on your S corp or on your taxes by using the S corporation. So let's jump right into it. So how do I discuss the S corporation with my client? It's actually pretty simple. So what I want you to do is imagine that you have a client sitting in front of you and they have a Schedule C, and we're about to have the conversation to switch them into an S corporation. Now, before you might have just said, let's do an S corporation, or hey, I think you should do an S corporation. But the thing is you have to ask yourself, how many times have people taken you up on that advice? The answer is probably not that many, right? So the thing is we've really got to put something in place so that our clients understand that that this is going to be beneficial for them, and that we really, really want to be proactive and help them implement this. And that's really what is key, is helping the clients implement this. Not just saying, hey, you should do an S corporation, but hey, this is how it's going to help your business, and this is exactly the step-by-step process on how we're going to help you set up the S corporation. So let's jump right into it. So client, hey, I noticed we have a Schedule C here, and I think there would be a lot of benefits to converting your Schedule C business into an S corporation. Now, one of the benefits is you get to save money on Social Security and Medicare taxes, right? You see right here on this line, you can see our self-employment taxes. That's the Social Security and Medicare that we're putting money into. And we get to adjust that a little bit, but really what we want to do is we want to save money on this. Now, we can save money here on the self-employment taxes, your Social Security and Medicare, by converting into an S corporation. And essentially what we do is we break out how you take money out of the business. Now, right now, you just write a check to yourself as distributions whenever you want the money. And that's okay. You can still kind of do that with the S corporation. However, we're going to add a couple more layers onto that. And by adding those layers, we can actually add a couple tax-free layers. How does that sound? Good. We're also going to show you a way that we can get some of that money tax-free. That sounds good. Yeah, right. And we're also going to reduce your audit risk. How does that sound? Yeah, that sounds pretty good. Now, in California, we've got a minimum franchise tax of $800. So it's a question I get asked a lot, really often, is like, hey, should I do the S corporation? Should I do an LLC? I know I got the $800. Yes, right? By doing the S corporation, the quick rule of thumb math that I like to use is for every $100,000. If you're doing an S corporation with $100,000, by converting to an S corporation and doing reasonable compensation and reasonable salary, you're going to save between $5,000 and $6,000 a year for that $100,000. So if they're at $200,000, then they're double that, between $10,000 and $12,000 in savings. And if they're at $300,000, they're going to probably about triple that. So it gets into kind of the, the Social Security max and those kind of things, but that's kind of the rule of thumb, is they're going to be saving anywhere from $5,000 to $12,000 by doing an S corporation if they've got $100,000 of earnings. So what I like to do is I like to draw this out. Most people really love seeing something visually. So what I like to do is I like to draw out a circle and say, okay, as a C corporation, you just kind of took all the money as distributions. You could take it whenever you want, right? But with the S corporation, what we do is we break this out. And I want to show you how that's broken out really quick. So what we try to do is we try to do what's referred to as reasonable compensation, or wages. So I'm going to do reasonable compensation, and usually that's between about 30 and 40% of your income. Now, of course, we actually have to do a reasonable compensation report, and that's part of the tax planning process, which you need to talk to your clients about. But we're just going to really quickly gloss over this with our clients, discussing the reasonable compensation, but not getting too in detail with it. So we're going to do reasonable compensation. This is paid out with a W-2. Right? You also get to take distributions and dividends, just like you had been with your Schedule C. And that's okay. You can just write yourself a check whenever you want, because clients want to hear that. So those are going to be your distributions. Now, here's the fun thing, is there's a couple things that we can do inside the S corporation that we can't do through a Schedule C. And I want to talk to you about those things right now. So one is your reimbursements. So what is a reimbursement? Well, you can reimburse yourself for those things that you use inside the business completely tax-free. So this is things that you own personally that the S corporation is going to get benefit for using. So this is things like your personal vehicle, your home office, your personal cell phone, your personal credit cards. These are things that we're going to run monthly or quarterly out as reimbursements. And by doing that, we're going to not only reduce the audit risk on those, because we're not taking them on a Schedule C, we're taking them as a reimbursement, so it reduces the audit risk, but it's also going to give you that as tax-free income. Sounds good? Yeah. Right? So the other thing, and this actually gets into the next of the core four, is this little thing called rent. You might say, might be saying, oh, well, I'm already paying rent. Well, this is different. So this is number 2. This is what's called the 14-day rental rule. This is number 2. This is number 1. Oops. Oh, that's dirty. All right. Okay. So number 2 is the 14-day rental rule. So you might be asking, well, what's the 14-day rental rule? Well, inside the IRS code, they basically say that you can rent out your home tax-free up to 14 days every year. Pretty cool, right? Now the thing is, if you just casually mention this to someone, they're like, I don't want to rent my home to somebody. I don't want someone sleeping in my bed and like eating my food in my kitchen. Like I just don't want to do that, right? And some people are like, oh yeah, well I'm totally cool with that. And some people are like, no, like I don't want anyone in my house. So But what the 14-day rental rule basically says is there's no specific provision that says who you can rent to and who you can't rent to. As long as it's a separate business entity, as long as it's a separate entity. So a separate person, a separate business, a separate something. So essentially what we're doing is we're saying, well, yeah, we're renting it to this S corporation. I'm renting my home to my S corporation to have a monthly strategy meeting. That's it, right? So what we have to do is we just have to get the market value. When anything comes down to the IRS and is tax deductible, they just say, is this ordinary and reasonable? Well, what is ordinary? What would you ordinarily pay a place to use their conference room? Well, if you go to a Hyatt or a Hilton or a Marriott, it's like $500, $600, $700, $800 a day to rent their conference room. That's ordinary and reasonable. Is it ordinary and reasonable for a business to have a monthly strategy meeting? Yes, right? Is it ordinary and necessary? Yes. Is it ordinary and reasonable? Yes, right? Is it ordinary and reasonable to pay a conference room facility to rent that conference room facility to have a meeting? Yes, right? So that's essentially what we're doing is we're saying, hey, in lieu of, or instead of going to a Hyatt or a Hilton or a Marriott or country club or wherever, we're going to have it in our home, right? And so the corporation is renting out that facility from the homeowner, and we just have to do something reasonable, something that is market reasonable, right? And whether that's 500, 600, some clients push us up to $1,000. I've seen some people do it up to $2,000 because they use like Airbnb. It's whatever you're comfortable with as far as the level that you want to get to on this, but you can choose whatever is ordinary and reasonable. You just have to figure out that it's ordinary and reasonable, right? So that's the 14-day rental. So what is the cool thing about that? Well, that's creating tax-free income. Tax-free income of up to, it's like $14,000 a year. So what's the benefit of the S corporation? Well, yeah, you got the $800 minimum franchise tax, where you got the filing fees and you got the extra corporate compliance and you got all this other stuff. But there's little loopholes like this that are really cool that you can use, the 14-day home rental. All right. Now, if they're like, oh no, I don't want an S corporation, I've heard about that, it's just not going to work for me, it's fine. Just let it go. Not a problem. There's two strategies that you can use inside of Schedule C that work really well. So let's talk about this. Number 3 is hire your kids. All right, so hiring kids, that's super easy, right? Can you do that through an S corporation? Yeah, you can, but you lose out on some of the benefits. You lose out on some of the benefits of the Social Security and Medicare, because when you hire your kids through a Schedule C or through a family partnership where the parents are both partners and there's no other partners, then the kids don't have to pay the Social Security and the Medicare up to the age of 16. So if you hire your kids inside the C corporation, inside the Schedule C, you can get this basically tax-free. They can take their standard deduction up to $14,000, and you're hiring the kids inside the business to work, right? So essentially, what does that do, right? Well, we're really looking at shifting that income. And again, we like to diagram this to our clients. So how do we diagram this? Well, we can say, okay, this is your income here, and your income here is taxed at a 25% tax bracket, right? Let's say 24% tax bracket, right? So right now your tax is 24%, plus you got 15% for self-employment tax, right? Plus you got 15% for self-employment tax, and if they're California or in a state with state income taxes, they've got state income taxes, right? So this could be somewhere upwards of, let's say 37%. Let's just round it out and say 37%. Now, if they hire the kids and they're essentially shifting the income to their kids, then we could go to a 0% tax bracket. So you just shifted income from 37% to 0%. You like that diagram? My clients like that a lot. So essentially what we're doing is we're saying, hey, the kids are probably already working in the business. Your kids probably already help out in some situations inside the business anyway, right? So really what you're doing, you're compensating them, you're giving them the wages that they deserve, you're paying them, and they're getting that money tax-free. Now, what can they use that money for? Well, they can use that money for, lessons like swimming lessons and dance lessons and clarinet and musical instruments and things like that. They can use it for fun activities. If they say, oh, I want to go out with my friends and do mini golf, or we're going to go hiking in the woods or something like that, and they need money for that, they can use that money, right? And again, it's completely tax-free. So where you were giving your money to the kids, or where you may have been giving money to your kids and paying 37% or more or less on the tax as tax on that, while shifting it to your kids and using the money for the exact same thing, you're using more money, or you're getting more money because you're not paying taxes on it, because the kids are paying taxes on it at a 0% rate. So is this legal? Of course this is legal. Like, there's actually stuff inside the tax code, on the IRS website that says you can hire your kids and you don't have to pay this, right? So are we hiding anything? No, right? We're actually just saying, hey, the kids are working inside the business. The only thing we need to do is show that the kids are actually working inside the business. How do you do that? Timesheets. The kids just have to say, hey, this is what I was doing. This is my timesheet. Look at here. I did social media, or I did janitorial services. I cleaned up. I shredded papers. I contacted clients. I did door knocking for real estate agents. I mean, whatever it is, just say, hey, this is what my kid did, and they have a timesheet that shows. And how much can you pay them? Ordinary and reasonable. What's ordinary and reasonable? What would you pay someone else to do that kind of services? And that's what you need to do, and just pay them. Very cool. All right, so hire the kids. Number 4 is your MERP, or your HRA. So this is section 105A of the tax code. It basically says if you have employees, you can provide your employees tax-free medical reimbursements. This is called a medical expense reimbursement plan, or a MERP, or a health reimbursement arrangement, which is the HRA. And essentially what this does is if you have employees, which could include your spouse, you can provide tax-free benefits. So if you're set up like a Schedule C and you're married, you can essentially say, well, my spouse is working inside the business. And again, the timesheet that shows what your spouse was doing. And then what are the medical expenses that are reimbursable? Chiropractors, LASIK, braces for your kids, covers all medical expenses across the entire family. All right, pretty cool, right? So copays, deductibles. The only thing it doesn't cover, well, there's some things that it doesn't cover, like, maternity clothes and diapers and, formula, that kind of stuff, right? I mean, stuff that people would normally buy anyway. However, it doesn't also cover the medical insurance premiums. Those are on the schedule, the first page of the 1040. You just write them off as a deduction there. So what this does cover is the out-of-pocket, the deductibles, the copays, LASIK, chiropractic, dentistry, oral exams, eyeglasses, eye exams, lots and lots of stuff. And essentially what happens is you reimburse that to your employees through the Schedule C in lieu of cash payments. So you're saying, hey, this is a tax-free benefit, but you're not going to get money for it. I'm not going to give you money. I'm just going to give you this reimbursement. That's okay, right? So it's completely tax-free because it's a medical expense reimbursement. Now, if you have employees, if it's not just a husband and wife, if you have employees, this gets a little complicated. So we have a couple third-party providers that we work with that can actually help you with this if they have employees. But if they don't have employees, if it's just a husband and a wife or spouses, this is totally easy. And it's like 3 pages. All they have to do is fill out the 3 pages, and they can start taking these deductions right away. So that is what I call the core 4 of tax planning. Now, why do I call this the core 4? Well, I call this the core 4 because it's the easiest way of setting up tax planning, and it's quick and it doesn't cost anything. As you can see here, I'm not talking about health savings accounts. I'm not talking about investments accounts or retirements or anything like that costs money. Like, you have to take money and put it away for a retirement plan. You have to take money and put it away for an HSA, health savings account. All of this stuff is money that they're already spending. So if this is money that you're already spending, we're just changing the way that it's taxed and reducing the taxes or eliminating the taxes on it. The thing is, this doesn't cost taxpayers anything. And when it doesn't cost taxpayers anything to do these tax strategies, it's a lot easier to kind of work them into tax planning as a service. So these are the core 4 tax plans. And again, this is kind of baby steps, if you will, right? This is a great way to get people interested in tax planning, tax savings, and position you as a tax savings expert. And when you position yourself as a tax savings expert and you start talking to your clients about these kind of things, they're going to come back to you next year. Hopefully you're working with them proactively on this. And they're going to come back to you next year and say, hey, what's next? Right? And you're like, oh, you know what? I've got more stuff for you. I've got retirement accounts. I've got HSAs. I've got, conservation easements. I've got, all these advanced tactics, these medium level tax planning things. There's lots of different things that you can learn about tax planning. And it's really fun when you get into this and you can start showing your clients all these different ways of saving money, helping them save money on their taxes. So this is leading into the next thing I want to talk about, which is the tax savings team. Now, I actually run a team of tax professionals that are experts in tax planning. So if these are new to you and you're like, hey, I really, really want to share these with my clients, inside the tax savings team, we actually have a playbook that we help you create that is super easy. It takes about 5 or 10 minutes to actually set this up for a client. And then we coach you through how to actually deliver this and offer this to a client. So if you're like, oh man, I don't know anything about these, I got to do a bunch of research. We have all that research already done. You're like, I don't know, I need a checklist or I need to do something and I need to learn more about it. And how do I give it to my client? We have that, right? We literally have a tax strategy playbook. Where's my playbook? Here it is. So here's my playbook. So I literally have a tax strategy playbook here. And so inside the tax savings team, we're going to show you exactly how to build this out, exactly all the documents inside of it, and how to present it and how to offer it to your clients, how to price it, how to price yourself as a trusted expert and not just as tax preparer. And then also when you join the team, you're going to get access to not only the core 4, but also all of the other cool tax strategies. There's, the investment accounts, the retirement accounts. Did you know you can self-direct your HSA or self-direct your solo 401k? And you can put that money into, into Bitcoin or gold or real estate, fix and flips. There's lots of things that people are like, hey, this is really cool. This is interesting. I don't want my money just sitting in a money market account or sitting in a S&P 500 index. I want to, I want to have something fun. I want some fun investments. And we'll talk about that. You don't have to be an investment advisor, but you can still talk to your clients about investments. You don't have to be a registered investment advisor to talk about these fun self-directed investments. So core 4, there's some medium level tax strategies. There's some advanced tax strategies that you'll learn inside the tax savings team as well. We talk about conservation easements. We talk about oil and gas rights. We talk about monetized installment sales, which will allow you to sell commercial buildings or business completely tax deferred for 30 years and show you how to invest that money over the next 30 years so you can get a much greater return than it would cost you in taxes. So like I said, there's lots and lots of fun things that we can do. But the first thing is you got to get started, right? You got to get started first with yourself and show that this works for you and this works for your clients, right? So you got to take the baby steps before you can get into the really big stuff. So take the baby step right now and look in the comments here. I'm going to put the link to join the team. Have a conversation with me, watch the webinar, watch some of the training that I do here. If this is interesting to you and you want to position yourself as a tax savings expert to your clients, so you no longer have to compete on fees to your other tax preparers in the area. Like if you're like, oh, what does H&R Block charge? And you charge a little bit more or you charge a little bit less, hopefully not, right? This is going to completely blow that out of the water, right? Clients are willing to pay thousands and thousands of dollars for this, your knowledge, your expertise, and your clients want to work with their trusted expert, not with some box software, not with H&R Block guy that's going to spend an hour with them to do their taxes. No, this is positioning you as the tax strategy and savings expert that your clients really want to work with because you're going to be working proactively to help them save money on their taxes. So if that sounds interesting for you, check the comment, the link in the comments, jump on a webinar, jump on a call with me, jump into our Facebook group, lots of different ways to contact us and get into our tax savings team. And I'd like to invite you to join that team and take your practice to the next level. Thanks so much.